you have to pay it in France first, but then what's going on in the US? Americans are going to pay this 37 in France. Can you just keep your money and say nothing to the US government?
Well, certainly you have to report your capital gains. I'll be able to translate the differences in the two systems, which there are quite a few.
Hello guys, and welcome to French Tax Online. Today, I'm very happy to be with Sam again, who is with us to talk about a very specific topic, which is how is the French capital gain tax managed for US citizen and tax resident? Because of course, you have to pay it in France first, you have no choice because of the notary stuff, but then what's going on in the US once you're back in your country? We are going to discuss all these topics with Sam because, to be completely honest, I'm definitely not a US CPA. I'm just a French chartered accountant, and between Sam's knowledge and my own one, I believe we'll be able to answer all of your questions. Let's go. Sam, thank you to be with us today.
My pleasure.
Sam is coming directly from the US, from Texas, and she has been, where have you been already in the US?
Yeah, so before working at French Tax Online, I was a US tax preparer for 7 years, and I'm an enrolled agent. So I have a lot of background knowledge in US taxes. So for any of our clients coming from the US, I'll be able to translate kind of the differences in the two systems, which there are quite a few.
Absolutely. And this is very interesting to have Sam with us. And now, from time to time, I'm just asking Sam, hey, Sam, what's this? 401k, IRA, blah, blah, blah. What's this exactly? It's very useful. So we're going to talk about American people, tax resident, citizen, selling their second home in France. As you guys know, once someone is selling a French house, he's going to pay the French taxes no matter what, right? But this is not the end. If you're not a French tax resident, then you have to declare your French gain and pay some taxes in the US, I believe. First of all, let's talk about France. This is my topic. I'm very comfortable. And then we're going to ask some questions to Sam. So Sam, as you know, in France, American people would pay the French capital gain tax, which is at the moment 19 plus 18.6%. This is not 17.2 because it's changed just right now in January 2026 in the new finance law. It might change again, but at the moment, this is 18.6. So these people, American, are going to pay this 37 point something in France. The notary is going to pay those taxes directly using the same price. So there is no way to escape it, okay? But then, so you're a seller, you pay the French taxes, okay, you have your money back. What's going on? Can you just keep your money and say nothing to the US government?
Well, certainly you have to report your capital gains tax. I mean, you might end up getting a foreign tax credit for the tax that you paid in France on the capital gain.
Yeah.
But this doesn't mean that you just leave it and don't report to the US. You still have a filing or reporting obligation. The US is one of the few countries in the world that taxes based on citizenship as well as residency.
Okay. And when do you have to report this? Let's say you sell your house on the 30th of June. When do you have to declare it in the US then?
If you sell on the 30th of June,
Yeah.
you'll have to declare it on the tax return for that calendar year.
Okay, so you don't have like 30 days or 60 days as in France. You just have to do it on your regular own income tax return, right?
Yeah.
Okay, so you have plenty of time depending on the month.
Yeah.
Okay, and what's the rate you're going to pay in the US?
This depends on the rest of your income as well.
It's going to be used depending on on a bracket.
Yeah,
bracket?
we have a graduated rate, progressive tax scale.
Okay,
Yeah.
and the capital gain is just another type of income, but it's not specific as it is in France. I'm asking this question because in France, if you are selling a US home, you would have 60 days to report it to France, for example. And in France, as I said, the capital gain tax on real estate, it's a very specific rate.
We also have different capital gains tax rates. So, if you're selling stocks, for example,
Yeah.
we have short-term versus long-term rates. It's not the same as France.
What about real estate? It's just your regular income tax rate, nothing different.
Yeah.
Okay. What about a foreign sale? Because maybe it's different whether it's a US home or a French home, Italian home.
So selling a French property, even if you are living outside of the US, could trigger capital gains tax in the US.
Of course, yeah.
And what you'll need to do is report this on your US return, probably under Schedule D for capital gains. This might trigger other reporting requirements too, such as FATCA. This is for if you reach a certain threshold of foreign assets in the US. And it depends on your filing status and whether you're a resident or not, how much at which point you would have to report. There's also the FinCEN Form 114 or the FBAR, and that is required once you have at least 10,000 US dollars equivalent in foreign accounts during a calendar year. If you're selling a foreign property, you're probably going to have more than $10,000 in an account at some point during the year.
Probably, yes. Do you guys have like a taper relief on the calculation of the capital gain in the US? Do you have allowances, credits, or not at all? I mean,
Yeah.
is the gain just sale price minus purchase price? That's all. Or can you deduct a lot of stuff on top of it?
There are other things. It's a bit more complicated.
Okay.
Yeah,
Yeah, as always with the taxes.
of course.
And Sam, how is going to be treated the taxes paid in France in the US? Is it refundable? Is it lost?
Well, there are ways that you can avoid this double taxation.
Yeah.
Well, you technically must report your worldwide income if you're a US citizen. You can claim a tax credit called the foreign tax credit that you can use to offset the amount of tax that you would have owed on the capital gains in the US.
Yeah.
So this amount can reach as much as the amount of capital gains tax you would be liable for in the US, but it cannot exceed it. So you can't get a reimbursement for additional taxes paid abroad
Which
by the
makes sense.
US government. No, that makes sense. But the other good news is that if you have excess foreign tax credits, you can carry that back 1 year or carry it forward for up to 10 years for most circumstances.
Oh, this is not possible in France. Trust me on this one. Thank you, Sam.
Yeah. So I had a question.
Yeah.
What happens if the property is owned by an LLC or an SCI?
Oh, in this case, it might be very different. If your French SCI is a transparent entity, which means that it's not corporate tax registered, then it's not going to change anything, right? But if it's a corporate tax entity, then the whole calculation is going to be different, and you would not pay the personal taxation. You're going to pay the French corporate tax. And in the end, you would not pay the US taxes on this. You would pay US taxes on the dividend, which would come from the liquidation of the company. So it's very different. On the other hand, if the property is held through an LLC, then again, it will be different because you will have to pay the French capital gain tax on the limited companies, which is very different again, and it's not very beneficial. So my advice is not to buy French properties through foreign companies.
That's a good tip.
Yeah, it is.
And what is a tax representative in France? We don't really have this system in the US.
Yeah, it's I would say it's a very French thing. Actually, we are, because I am with the French Tax Online, we are 9 tax representative in France, fully accredited by the Ministry of Finance. And our role is to calculate the gain or the loss and to take full liability on it, which means that, let's say you're selling your house in France, then go back to taxes. In this case, if there is a later tax investigation, I will be the only one liable for it, and I will be the only one fighting back with the tax office, right? Having a tax representative is mandatory for any non-EU tax resident selling a French property above 150,000 euros. Why is that? It's because it's much easier for the French tax office to ask me to pay something rather than asking someone in China, Japan, or the US, right? I mean, you have someone in France, you know there is money because there is a financial guarantee, insurance, etc., etc. It's much easier. So the tax rep has been created to make the French tax office safer and to make all this money more available and more easy to get, right? Thank you, Sam. I think it was a very useful conversation. Even I learned quite a lot of things. So you guys, don't worry if you have questions related to France and the US. We have the French side, we have the US side. So I believe we are quite competent to talk about that. But if you are selling a French home in France, do not forget to report it to the US. We are working with a very nice firm doing US taxes, and they are specialized in expat. So if you want an introduction, we will be very happy to do an introduction. Thank you very much. Thank you, Sam.
Thanks for having me.
Great having you.
Yeah.
Thank you, and see you soon on French Tax Online.